Have you ever wondered how millionaires manage to legally pay less in taxes while building and protecting their wealth? In this video, we'll uncover 15 tax planning techniques that the wealthy use and show you how to adapt them to your own situation. Whether you're a small business owner, a financial professional, or someone simply looking to optimize your finances, this guide will help you understand strategies like tax-efficient investments, business structuring, deductions, and even succession planning. By the end, you'll have actionable insights to reduce your tax burden and keep more of what you earn. Let's dive in. Why do millionaires engage in tax planning? But before we continue, I'd like to take a moment of your time. Imagine reprogramming your mind to think like a billionaire. With the Billionaire brainwave, you can activate your theta brainwave in just 7 minutes a day, unlocking creativity, focus, and a success-driven mindset. Developed by neuroscientists and used by thousands in over 70 countries, this simple program has been transforming lives, helping people achieve financial freedom and turn their dreams into reality. And the best part? It comes with a 90-day money-back guarantee, so there's absolutely no risk for you. Want to give it a try? Click the link in the description or simply point your phone at the QR code. Let's continue. Before we dive into each technique, let's take a moment to understand why tax planning is so critical for high-net-worth individuals. Tax laws offer various options, allowing those who are financially strategic to legally reduce their taxes. However, contrary to popular belief, these methods aren't only for millionaires. Most of these tax benefits and planning options are available to anyone with a solid understanding of the tax code or access to good advice. For business owners, independent contractors, or even those with regular employment, tax planning can mean substantial savings. When approached thoughtfully, tax planning becomes an essential part of maximizing one's financial potential. Today, we're not just discussing loopholes, but rather legitimate, accessible practices that anyone can learn from. With the right insight, you can make informed choices to optimize your finances, just like the wealthiest individuals do. 15 techniques. Now that we understand the value of tax planning, let's explore the 15 specific techniques that millionaires use to optimize their tax obligations. We'll break these down into 4 categories, each focusing on a different approach to reducing taxes: investment strategies, business structuring, deductions, and succession planning. Each method can be tailored to various financial levels, so as we go through each one, consider which might be most relevant to your own financial situation. Investment-based tax reduction techniques. Tax-free investment accounts. Millionaires often use tax-free investment accounts, like ISAs in the UK, to shelter earnings from taxes. By investing in tax-advantaged accounts, they can accumulate returns on investments without triggering immediate taxes. This strategy allows gains to grow untaxed, potentially compounding over years. While certain accounts have contribution limits, using them strategically can significantly reduce tax liabilities over time. Investing in tax-exempt or incentivized sectors. Another approach is investing in government-incentivized sectors, like renewable energy or affordable housing, which can offer tax breaks or credits. These investments benefit society while providing financial returns with tax advantages. For small investors, options like green bonds or sector-specific funds can offer similar benefits, allowing you to grow wealth with potential tax benefits. Government bonds and other tax-beneficial securities. Investing in certain government bonds can also yield tax-free income. Many high-net-worth individuals hold government-backed securities specifically for their tax benefits. For instance, UK government bonds are often exempt from capital gains tax, providing a secure, tax-efficient income source. Such investments can be part of a diversified, tax-smart portfolio for any investor. Real estate investment trusts, REITs. Real estate investment trusts, REITs, allow wealthy individuals to invest in real estate without direct ownership, offering tax benefits like reduced rates on dividends. In the UK, REITs are exempt from corporation tax, with some income passed on to investors as tax-free dividends. Small investors can also use REITs to access real estate gains without incurring full tax liabilities on direct property ownership. Business structure-based techniques. Establishing businesses in tax-friendly regimes. Millionaires often establish companies in tax-favorable jurisdictions or select business structures that minimize taxes. In the UK, small businesses can benefit from certain regimes or exemptions available in specific areas. For smaller enterprises, selecting the right structure, like an LLP, can allow for income to be taxed at a lower rate, legally reducing tax obligations. Using holding companies to consolidate assets. A holding company structure allows individuals to manage multiple businesses or assets while centralizing control and potentially reducing tax exposure. Assets within a holding company can grow with reduced taxation on intercompany transactions. This approach also provides flexibility for succession planning, making it useful for family-owned businesses aiming to pass wealth tax efficiently to the next generation. Income splitting across multiple entities. Income splitting is a method where income is distributed across different entities or individuals to benefit from lower tax brackets. High earners can reduce their overall tax burden by splitting income with family members or through business partnerships. While this requires careful planning, income splitting can create tax-efficient structures for family businesses or entrepreneurial endeavors. International tax structuring for export businesses. Companies engaged in exports may structure operations in tax-favorable international locations. This reduces corporate tax on income generated outside the home country. While large corporations use these methods, small businesses expanding internationally can benefit from structuring overseas operations in countries with competitive tax rates, keeping profits within compliant, lower tax jurisdictions. Deduction-based techniques. Deductible business expenses. From office supplies to travel expenses, deductible business expenses reduce the taxable income of a business. Wealthy individuals maximize these deductions legally by tracking all eligible expenses. Small business owners and freelancers can do the same. Deducting costs related to their business operations can significantly reduce taxable income, leaving more funds for growth. Government incentives and subsidies. Millionaires take advantage of incentives for businesses in certain sectors or engaging in research, renewable energy, or technology development. Tax incentives and subsidies support these efforts, benefiting the economy and reducing taxable income. Investigating local and national government programs can reveal significant savings, especially for small to mid-sized businesses aligned with strategic sectors. Contributions to private pension plans. Pension contributions can lower taxable income while securing long-term financial stability. Wealthy individuals often max out pension contributions for tax relief benefits. By contributing to private pension plans, anyone can gain tax advantages today while planning for future financial needs. In the UK, pension contributions often benefit from substantial tax relief, making them a smart part of a tax plan. Training and educational expenses. Training and employee education costs can qualify as deductible expenses, lowering the overall tax burden of a business. Millionaires invest in upskilling employees, using deductions to offset these expenses. Business owners of all sizes can take advantage of this by investing in continuous learning for their workforce, improving both company performance and financial health through tax-efficient spending. Succession planning techniques. Trusts for wealth transfer. High net worth individuals use trusts to pass wealth to heirs with reduced tax liabilities. Trusts can protect assets and minimize estate taxes, creating a tax-efficient legacy. Families with significant assets may consider trusts to ensure wealth is transferred securely and with lower tax costs, preserving wealth across generations. Family investment funds. Family investment funds allow high net worth families to pool resources for collective investments, often at lower tax rates. These funds can be structured to minimize estate and inheritance taxes, providing flexibility in how wealth is transferred. Even smaller family enterprises can benefit from setting up family-oriented investment vehicles, creating tax-efficient family wealth-building structures. Gradual gifting to heirs. By gifting assets gradually over time, wealthy individuals can reduce inheritance tax liabilities. This method allows for wealth transfer without significant tax hits, often using annual exemptions. Families looking to pass on wealth can consider annual gifting to take advantage of exemptions while creating a long-term, tax-efficient wealth transfer plan. These 15 techniques illustrate how wealthy individuals legally and strategically reduce their tax burdens. But remember, with the right knowledge, these strategies can benefit a range of financial situations, not just the ultra-rich. With these techniques in mind, let's summarize the key takeaways to reinforce how tax planning can truly empower anyone's financial journey. Let's quickly recap the main strategies we've covered to keep them fresh in your mind. We started with investment-based techniques, like using tax-free accounts and investing in tax-exempt sectors. These methods help grow your wealth with minimal tax impact. Next, we explored business structuring strategies, where tools like holding companies and income splitting allow for significant tax savings by optimizing how income is earned and reported. We then moved on to deduction-focused techniques, highlighting the importance of tracking deductible expenses, using government incentives, and even leveraging pension contributions to reduce taxable income. Finally, we covered succession planning strategies like trusts, family investment funds, and gradual gifting, all of which help millionaires reduce inheritance taxes and efficiently transfer wealth to future generations. Each technique brings unique advantages, proving that tax planning can be a powerful tool for anyone aiming to maximize their financial potential. Now that you have a roadmap of these techniques, let's talk about how you can start applying them in your own financial planning. Armed with these techniques, you're now better equipped to approach tax planning like a pro. But remember, these strategies require careful planning and often benefit from professional guidance. Whether you're a small business owner, freelancer, or just someone wanting to optimize your finances, consider speaking with a financial advisor or tax specialist. But before we continue, I'd like to take a moment of your time. Imagine reprogramming your mind to think like a billionaire. With the Millionaire brainwave, you can activate your theta brainwave in just 7 minutes a day, unlocking creativity, focus, and a success-driven mindset. Developed by neuroscientists and used by thousands in over 70 countries, this simple program has been transforming lives, helping people achieve financial freedom and turn their dreams into reality. And the best part? It comes with a 90-day money-back guarantee, so there's absolutely no risk for you. Want to give it a try? Click the link in the description or simply point your phone at the QR code. Let's continue. They can help you adapt these techniques to your specific situation, ensuring you maximize savings while staying within the law. And if this video has inspired you to learn more, subscribe and explore our other content for more insights on smart financial planning. Thank you for watching. If you found value in these tax planning strategies, don't forget to give this video a like. Your support makes a huge difference. Share your thoughts in the comments. I'd love to hear if any of these techniques were helpful. Make sure to subscribe for more insights, and why not share this video with a friend who might benefit, too. And if you're ready for more, check out our next video. It's packed with even more tips to boost your financial knowledge.